Good afternoon, everyone. It's nearly 20 past 3 in the UK on the 19th of June, so we're into the US trading day, slightly over 45 minutes. So a very strong day so far. The S&P has opened up about 34 points. The advance is well ahead of the declines, and although this is just looking at the first 45 minutes of trading on VectorVest, everything is looking good. The color guard is bullish, and VectorVest advocates buying safe undervalued stocks that are rising in price at this time. Short-term trend is up, longer-term trend is up, and we've got a confirmed up in place. So let's just have a look at the market itself. And if I go to timing on VectorVest, click on the market timing graph, and it comes up. This is the VectorVest Composite, folks, of the US. And to complement the price, I have our proprietary market timing momentum plot and the proprietary buy-sell ratio. Now, on this campaign, I've been using a medium-term market timing system called the DEW, and that DEW has been up since the 6th of April. Wasn't the easiest signal to take on the 6th of April, but nevertheless it was preceded by a mega oversold situation, which made it a little bit easier for me because I've got a great deal of confidence that the DEW provides a wonderful signal coming off a major bottom, and that has been the case, and we've had this move up, and that move up is still in place. Now, there was a couple of very dodgy days on that particular Thursday. It was difficult, and last Thursday as well, as this market came back and kissed that old top, it was difficult as well. Now, what's happening is that we're pushing up. There is a strong resistance level over the last 4 days, and if you've been watching the market intraday, you'll know that it's been pretty much stuck in a very tight range. Those of you that are Fibonacci advocates, that is a Fibonacci level. On the futures market, the small S&P contract, the E contract, those highs are defined by a 78% retracement of that last range, this little range down. And I've been advising people that if you see the S&P getting up and closing above 3180, then I think that this move will take out these highs. So I've put on a very short-term momentum indicator that I've got a great deal of faith on, called the stochastic, designed by an old friend of mine called George Lane, sadly long gone. And the stochastic, in fact, is on a buy. It didn't quite get oversold. It got down nearly there, but it's currently saying that this market wants to go higher. Those of you that have done my work in the short-term courses will see that was rising, but this was falling, which is a type of divergence known as reverse divergence, which is a very positive signal. Let's see how we can go here. But what's happening now is that we could be setting up for a divergent signal on the MTI and on the buy-sell ratio. And if this market were to push up and make a double top or make a new high, and the MTI fails to make a new high and the buy-sell ratio fails to make a new high, then that would be a normal divergence that has a very good track record of predicting tops. If I get rid of the short-term stochastic now, then this rose into the sell-off in February, this fell. But all of these divergences need to be, in fact, complemented by a price signal. The divergences can hang around there for a very long time. So I'm holding my positions, folks, as I said to you probably a dozen times in these talks, as long as the DEW stays positive. In the US, I've had a cracking time, and I probably should have had many more positions, but the mega oversold nature of the market made me cautious. There are old traders and there are bold traders, but there are no old bold traders. So if I actually go to viewers, and I'm just holding these 5 positions. They are all leverage positions because I trade them through a UK CFD provider, and since I've last spoken to you, the only one that I've added to or bought into is Twilio. I had a trade in that a few weeks ago, and I added into that. So they're all going reasonably well, and let me just chart those if I can quickly. There's Dollar General. That's the one I've had for a very long time. I'm dating myself, I know, by using bars, but I started with bars. I'll put on the DEW signal. DEW signal came in somewhere around here, and I've been holding that, and it seems to have broken up very nicely indeed. This was difficult here, but that's the name of the game. AMD, I'm sitting in waiting for the break. Is it going to break? It seems to be moving into a little bit of a triangle here at the end, which is quite positive, but I've been waiting for this break for a long time now. I just hope the market's got enough legs in it to allow it to break, because the break could be significant. Microsoft, just a great share. Again, I've been into it for quite a while, but it actually broke, came back and kissed, and we've got this huge cup and handle pattern that seems to be, I like the look of that little gap this afternoon as well. Always bodes well. That's the Twilio. I added to that. No, that's not true. I was in the share here, got out, and then got back in somewhere about here, and it's moving very nicely indeed. I won't be that this little bit is a target, folks. So if you look at that, this little bit here, and you add it to the breakout, you get the target. So and we teach that in our swing trading courses. TTD has just been a beautiful trade. This again is a setup that I was taught by a trader of yesteryear by the name of Richard Wyckoff, and this is a classic Wyckoff spring, and you can see why it's called a spring, because it's sprung from 3 till 4, $400 in the last a couple of weeks. So it's just been a cracking trade. I think there's still legs in it yet, so those are going well, thank goodness. So let's look at the other side of the Atlantic and move back to the UK. The UK market has had a good day today. Short-term trend is up, the longer-term trend is up. We're in a confirmed up. The buy-sell ratio is in territory that we haven't seen in the UK for certainly as long as I've been looking at VectorVest UK, at 7. The MTI at 1.54, and we have got VectorVest advocates caution when buying stocks at this time. I think that there's a good chance after today's trading, if nothing changes, that we'll be into this green part by Monday. So let's see what the close says tonight. I've got the VectorVest end of day chart here. That would be on the 7th. That's correct. This is the end of day VectorVest UK market timing chart, and this is the 2,000 shares that we follow, equally weighted, and we've got a very similar situation. There's the DEW. The DEW still in place, and this market making its way up, and if it were to break a new high, and this will certainly be well up today, I think, then the MTI hasn't followed. That divergence, as I said a moment ago, can hang around for a long time, so the divergence needs to be complemented by a DEW signal. Folks, and I'll be saying it to the VectorVest regulars in the UK, if we were to get a DEW sell signal preceded by a mega overbought situation, preceded by divergence on both the MTI and the buy-sell ratio, then that needs to be looked at very seriously indeed, and yours truly will be lightning and running for cover. So I don't think I'm not allowed to give financial advice, but I can't say it much more loudly than that. If I go to viewers and I look at my watch list viewer, I started to take positions from March the 24th. That was a few positions were taken, very small positions were taken based on a green light buy, which is in fact slightly more aggressive than the DEW, and I had the strength to do that because we were coming off that major bottom, that mega oversold situation, and invariably we get a bounce from there. I didn't think the bounce was going to be as long as this, but it's still running. So Games Workshop, Lion Trust, Avon, JD Sports, Diploma, and I think the Games Workshop is worth a look, in that if I pull up the chart, I wrote about it in this week's essay to the VectorVest customers. This a pullback to that last old high is always a great entry. Okay, and this is another classic Wyckoff spring. And this, of course, is a what's called a bull flag, and it's going to struggle around the old high, which it is, but it looks to me, if the market's intact, that that's going to go very well over the next few days. So all the shares in profit, and I am going to hold on to them as long as the DEW is up. I'll say it again, folks, if the DEW turns down preceded by such an overbought situation, then I shall be in fact lightening considerably, and I can chill for a couple of weeks, because as I told the VectorVest regulars way back in April, that even if this was a bounce in a bear market, that bounce will probably be enough to make our annual target, certainly a conservative annual target, many times that you would get in the bank. So that has been done, and done quite easily. So all good as she goes. I think if the S&P breaks up above that 3180 odd level, and the color guard on VectorVest UK joins that on the US, then I think that you can add to positions. I think that you can start and initiate new positions, but again, beware that if the market makes a new high and those VectorVest metrics cannot follow, that is an advance leading indicator of change. Thank you very much indeed. I hope this helped.